Hey everyone, welcome to another video. In this one, we will look ahead to the week of July 6th, 2026. This marks the first full week of trading for the month of July, and the first few days of the month have certainly started out with some decent volatility and good two-sided price action. Hopefully it's a sign of things to come for the month. Before we begin, I also want to quickly note that historically July is one of the most bullish months. 15 out of the last 16 Julys have been positive on SPX, and we are currently on a consecutive streak since 2014 of every July being bullish. So, definitely something to keep an eye out for as we kick off another new month and head into a new quarter. All right, so we'll begin with a quick look back into the previous week before we go through on what to expect for the coming week as well. So last week, SPX had an expected move of about 130 points, as we can see right here. We had started the week at 73.54, and the upper and the expected move was 74.82 and 72.26 on the downside. So this was for last week. And SPX closed at 74.83. And as we just said, 74.82 was the upper end of the expected move. So we were outside of it just by about 1 point. For all intents and purposes, this was a one standard deviation move. So the week started out with a pretty big explosive move to the upside. Here's Monday, Tuesday, and then Wednesday. Even Thursday morning, we can see that the candle actually made a new high for the week. And it was beginning to look like we were just going to keep running, and all-time highs were definitely within striking distance. But things kind of reversed down on Thursday, kind of led by the Nasdaq and a lot of the AI trade. Kind of started to unwind. I'm using that word very loosely. We're still obviously, just about 140 points from the all-time highs. So we haven't really seen an unwind just yet. But Nasdaq was down close to 3% at one point on Thursday. So that kind of put a little damper in the SPX rally. So even though we consecutively made new highs for this current leg up on Tuesday, Wednesday, Thursday, we kind of saw a little bit of a reversal, and Thursday kind of just ended up closing flat for the day. So um, still a bullish week nonetheless, right? We moved that full 130 points, give or take, to the upside on the expected move. So definitely kind of as expected for July. At the top of the video, I talked about how July is generally one of the most bullish months. So the first couple of days here have definitely reflected that notion. So the other thing last week in the video, we talked about the 50-day moving average. The prior week, the week ending on June 26th, this candle right here, we had closed below the 50-day moving average for the first time in a few months, actually. So the bulls were able to take that price back. I guess this was just maybe a little blip in the radar, a quick little pierce through, and we clearly bounced right back up. The 50-day is still trending up. The wick of Thursday's candle was actually not too far from it, and if we kind of extend this coming into this week, maybe we can expect a little retest at some point, maybe early next week, and maybe that's kind of an area where we could bounce from if there is a down move. We'll talk about that more as we look ahead into the coming week, but just keep in mind that 73.94 is where the 50-day moving average currently sits, just about 90 points lower from where SPX closed last week. All right, so let's jump into what to expect for this coming week. So we're kicking off the week of July 6th, which, as I mentioned, would be the first full trading week for the month of July. Now, the expected move coming into this week is roughly 98 points. This is actually the first time we're seeing an expected move less than 100 points going back all the way to January. For most of this drop here in March and then the big rally that continued up, we have had almost 3 consecutive months of the expected move being over 100 points. This is the first time in a full trading week that we're seeing the expected move be less than 100 points. So just something to keep an eye out on as volatility actually is starting to contract. VIX closed under 16, actually at 1581, and we're also seeing the short-term weekly implied volatility sitting at 13. Just a week ago, this was still at around 20, and we know that last week on the shortened week we had a 130 point expected move. So definitely interesting as we're heading into a full trading week and we're seeing the implied volatility contract and the expected move come down with it. So as we look at the levels here, 74.83, as we know, is going to be the midpoint of the expected move. Obviously, that's where SPX closed last week, so that's where we're going to be starting this coming week. The upper end of the expected move is 75.81, which almost perfectly aligns with this candle from June 15th. So this candle right here, June 15th, the high of that candle was 75.77. So just in the neighborhood of the 75.81. And then going back just a few minutes ago when I was talking about the 50-day moving average sitting here at 73.94, we can see that the lower end of the expected move is at 73.84, just about 10 points below the 50-day moving average. So I think if we do get some downside price action, which as we talked about, is rare in the month of July. But if we do get there, I think this 73.94, 73.84 area should definitely serve as some good support. We have the 50-day moving average and then also the lower end of the expected move kind of aligning almost perfectly, at the same level. So the options market seems to be kind of reflecting what we're all kind of seeing here on the chart. And then also this swing low from just last Thursday is sitting at 74.27. So if Monday did start out lower, maybe that's kind of the first level that we could bounce from. But futures were trading on Friday, even though the equity market was closed. So depending on how things go tonight, Sunday night, we're kind of expecting a little bit push higher, at least on SPX, heading into Monday. But still, these will kind of like be the first levels to watch for. Definitely interested on what happens if we actually do make it down here. Like I said, it's a rare event in July to kind of see downside price action, but it's kind of cool to see these levels align. So this 73.84 to maybe 7400 area will definitely be of interest. And then to the upside, yeah, going back to mid June, this level aligns almost perfectly as well. So there's a lot of swing points, on the chart now. We kind of have some points to kind of, or levels to kind of gravitate towards, and the expected move is kind of starting to align with those levels almost perfectly. So pretty small expected move. We're heading into the summer months, so I think we got to get used to that. I said at the start of the video, I hope that July has some good two-sided price action. We can only hope that's the case as traders. That's what we want to see, right? We want to see big swings on both sides. We want to see volatility in the market. So right now, the market's not reflecting that volatility. With VIX closing under 16 and the expected move coming down to double digits, but let's kind of see what happens on Monday. That'll kind of maybe paint the picture of what to expect for the coming week. All right, so zooming into SPX here, we're looking at the 5-minute chart over the last couple of weeks of price action. So I have two levels marked here. Both of these are the Thursday levels, the Thursday high around 75.40 and the Thursday low from 74.27 roughly. So as we kick the week off, these will kind of be the first levels of interest. Both of these turned out to be reversal points on Thursday. So when Thursday kicked off, we kind of had this big up move. We came back down and then kind of bounced a little bit again and closed unchanged for the day. But these levels that I've marked, this swing high, swing low from Thursday will be kind of the first key levels to watch for. So 74.27 and 75.40 on SPX. Beyond that, I mean, given how small the expected move is, if we were to break any of these levels, we're just a stone's throw away from the upper end of the expected move. So really the week, I think, just kind of comes down to where price kind of breaks out of Thursday's range. We could just spend the week ping-ponging between these levels, but I'm kind of expecting price action to kind of start breaking these levels towards the end of next week, maybe even just at the start of the week. Who knows, right? But these will kind of be the guardrails for the start of the week. So just something to keep an eye on. I think Thursday's candle was one of the larger ones from last week. It kind of really opened up the range on the daily chart. So this is kind of where we'll be focusing to kick off the week. All right, I also quickly want to take a look at the VIX. I kind of talked a little bit about volatility and implied volatility, both short term and VIX itself, at the start of the video. But I do want to kind of look at VIX, at least the daily chart, just to kind of see what's been going on. So we see, volatility's been kind of trending lower for the last, week, give or take. Um, we're actually kind of back in the middle of this historical range. So this gray box that I have here is going back many years. If we were to kind of zoom out on the chart. So it's kind of this area between like 18 and let's say 13. That's kind of been the historical range that VIX generally trades within. When we break out, obviously to the upside, it's because of some crazy things like the Iran War, Liberation Day, etc. So this other red line I have marked here, just under 17, is kind of where VIX was before this whole Iran situation, and seeing VIX kind of expand here in March. So we are below that level, so we'll just call it the pre-war level, I guess. And 23 is kind of like that. Okay, things are starting to get serious. VIX is breaking out of its historical average by multiple standard deviations. So that's kind of where 23 comes in. But yeah, I mean, we closed the week at 1581, still seem to be trending down. I don't know if we'll break this holiday low, right? This 1338 is from like literally Christmas time. But going back to last summer, July, August, we saw VIX for a couple of months just sitting, towards the lower half of this range. So maybe we're just entering a period where we're just stuck around that 15 level for a couple of weeks, maybe the rest of the summer. But um, just something to keep an eye out on, right? If VIX starts to rise without SPX starting to fall, that's going to be something to keep an eye out on. Or even if it rises with SPX, right? We kind of talked about this in some of the blog posts earlier this year and throughout the year. In January, February, when SPX was going up, so was VIX. And that ultimately led to a huge explosion to the upside. So generally, just historically, when we see VIX rising with SPX, that I'm not going to say it doesn't end well, but usually there's a big swift correction that comes with it. So if we see VIX actually start to kind of bottom off and SPX pushes higher towards that upper end of the expected move, or even to new all times high this month, just keep an eye out on VIX. If it starts to flatline and even starts to rise with SPX, we could get another pop back towards that 20 or maybe even 23 level. So just something to keep an eye out on as we head into the new month. All right, and one more quick segment before we end the video. I want to kind of make this a routine as part of the weekly videos. Is kind of do like a trade of the week idea, and maybe throughout the week, either in another video or just in my daily blog post, we can kind of track how the trade is playing out. During the week. So what we're looking at here is actually a diagonal on SPX for the Friday and the following Monday expiration. So we know that this coming week, July 10th, will be the weekly expiration, and then July 13th is that following Monday. So this diagonal is something I like to call just the expected move diagonal, where basically we can see the break even points on this trade are 73.85 and 75.97. This is, as of recording on Sunday, obviously things could shift if we gap open higher or even lower on Monday. But assuming, the market opens roughly flat on Monday morning, our expected move values, if you remember from earlier in the video, are right around the 73.85 and this 75.97 level. So actually on the upside, we just have a little bit of extra wiggle room. So basically, the idea of this trade is you pay a small debit. Currently, we're looking at about $3.45 for this trade. And as long as SPX remains within the expected move, which is one standard deviation, you'll come out ahead. Obviously, towards the tails, we can see your profit significantly drops versus if SPX closes essentially not just unchanged, but maybe just a little bit higher for the week. So this is mostly purely a theta, a little bit of Vega volatility play where you're kind of expecting price to kind of finish close to where it started the week. Um, In the summer months, we're looking at VIX, sitting here at 1581. The expected move is coming down. So, we see a lot of weeks where SPX just kind of slowly pushes higher, maybe 20, 30 points at a time. Um, and the summer months might not be a bad idea for a trade like this. So, like I said, we're looking at a 345 debit right now. Just on a one lot, your max profit on this trade is just under $3,000 if SPX was to close right around 7,500 or between 7,500 and 7,505, so about 20 points higher on the week. We know the expected move is 98 points. So as long as it stayed within these 98 points, you'd make some amount of money. Obviously, with the max profit coming at just a slightly higher move towards 7,500, but anywhere in this range, really, you come out ahead, and a pretty cheap trade to put on. You risk about 350 bucks to potentially make up to 3,000 or something. So this is kind of like my trade of the week idea. Obviously, not financial advice or anything here, but just something to keep an eye out on, something to track for you options traders out there. Um, I think these trades are really interesting, especially on weeks where SPX doesn't end up doing anything, and then if it does, if we have some crazy news where we blow out to the upside or downside, it's a very minimal risk, right? On the downside, all you can lose is this 345, and to the upside, the max loss is maybe around 550 bucks. Unless we got something crazy, but even then, you're looking at an absolute max loss on the upside of about 600 bucks. But week after week after week, we see generally SPX close within the expected move. The theoretical value of that would be 68%. So 68% probability of making at least a penny on this trade. So something to keep an eye out on, and we'll track it throughout the week. All right, and that's going to do it for the video for this week. So, thank you for tuning in. And as I had mentioned last week when we kind of started this video series, growing pains as we go along, and I try to figure out how to format these videos and kind of what things to talk about. So please do leave any feedback you might have. Or things that you might want to see. I personally, I kind of like that cadence of, we kind of do a quick reflection on what last week did, talk a little bit about what we're expecting next week to look at, maybe kind of throw in a trade idea. So that's kind of where I envision this headed, but always open for feedback. So I do appreciate you guys tuning in, and please let me know if there's anything you'd like to see, or maybe anything you'd like to see removed also from the video. So thanks for tuning in, guys, and good luck next week. Thank you.